Imagine a world where the price of your morning coffee, your commute to work, even the cost of heating your home can all be influenced by a single economic policy, the carbon tax. This is not a distant possibility, but a reality for many countries around the globe. But what exactly is a carbon tax, and how does it impact prices and inflation? In essence, a carbon tax is a fee imposed on the carbon content of fuels. It's an economic policy designed to reduce carbon dioxide emissions, which are a major contributor to global warming. The basic idea is simple: make it more expensive to emit carbon dioxide, and businesses and consumers will find ways to emit less. Now let's take a journey around the world to see how the carbon tax has affected different countries. In the vast landscapes of Canada, a federal carbon tax was implemented in 2019. This policy has had a noticeable impact on the prices of goods and services, particularly those directly tied to fossil fuels like gasoline and natural gas. However, the Canadian government has sought to offset these costs by providing households with rebates, which has helped to keep inflation in check. Meanwhile, across the Atlantic in Sweden, a carbon tax has been in place since the early 90s. The tax has been credited with reducing emissions significantly, but it has also led to higher prices, particularly for energy-intensive goods and services. However, Sweden has managed to keep inflation under control, largely thanks to a robust social welfare system and a gradual increase in the carbon tax over time. Down under in Australia, a carbon tax was introduced in 2012, but was repealed just 2 years later amidst concerns about rising prices. During its short life, the carbon tax did lead to an increase in energy prices, but the overall impact on inflation was relatively minor. So, what can we take away from these examples? First, a carbon tax can indeed lead to higher prices, particularly for energy-intensive goods and services. This is because businesses often pass on the cost of the tax to consumers. Second, the impact on inflation can vary significantly, depending on how the tax is implemented, and other factors such as government rebates, social welfare systems, and the state of the economy. And third, while a carbon tax can have economic challenges, it also presents an opportunity to drive innovation and transition to a cleaner, more sustainable economy. In summary, the carbon tax is a powerful tool in the fight against climate change. But like any tool, it must be used wisely, with careful consideration of its potential impacts on prices and inflation. As we move forward, it will be crucial to strike a balance between environmental sustainability and economic stability.